Welcome to TradeTheMBI.com. This is John. This reports for the 10th of April. Well, Good Friday. Not a whole lot happened. We're slightly up from previous day, but nothing significant. What's more important is the MBI Magenta below yellow, below 33, but still no short activation. So as much as you're seeing softness, it's marginal at best, and certainly not going to impact much on the ES there from a NQ standpoint. You actually see a pivot coming back to it, but interestingly, DOC spread right in the creation, but you got short-term buyers completely reset and now coming back above the negative 13.5, which usually is enough to help support it and maintain things in the interim. But we got a little more of a short activity from a MBI white setup here. So again, the Nasdaq has been the leaders at this particular stage, and if softness is going to occur, we're going to see it there first. So that will be the key elements to watch on this, and certainly we're going to see it intraday before any of that takes place as well. From a Treasury standpoint, again, peak rates from at least the bond view have been reached, and they expect easing to come from there as we approach, relatively the highs from back in December, which is crazy given that rates are significantly higher since then. So bond market is expecting a significant decline in rates going forward. Little strange when you're looking at oil back up near its peak levels here, and that continues to put inflationary pressures on things. So you got a lot of mixed bag going through there, and because of that, I think gold is still going to continue its climb because you have all the setups for classic stagnation of the 70s kind of built into this. The way to alleviate it was certainly to bring oil down, and you can see the Saudis are not cooperating on that, making exchange deals outside the dollar, cutting production. A lot of complications there, and that's an expectation for a weaker dollar. And so the euro has been on its tear, kind of mimicking what we've seen from the bond market's view of things. Whether that's really a sustainable idea, I just have a hard time seeing the Fed doing that, given the course direction that they've taken. They're willing to accept higher unemployment and that because they think that that would even create further easing of wage pressures. So you kind of have the market at odds with the Fed, which I'm always going to go with the Fed because, as I've always said, don't fight the Fed. And if the Fed is still going to continue its tightening policies, or at least even slow them down, it's not a loosening by any stretch of the imagination. So some people could get caught on the reversal with that, but it could take a while before that realization sets in. We've saw it happen for years where shorts were convinced that everything was going to hell in a handbasket and it didn't happen. So you can see the same thing can happen for a long standpoint as well. Bitcoin and them, I think, will continue to do just fine from an ETH standpoint, a little bit softer than Bitcoin, but it had been slightly ahead of it. So it's not unusual for them to pair out. And you can see from a 50K standpoint, we were off the bottoms, produced a nice turnaround. Once Magenta got over, we flipped to the green, and boom, it's been up since then. From a 5K standpoint, you can see the holiday activity was literally soft at first, but there not a whole lot of action. Once the European session started to close, boom, it shot up right before the U.S. market was set to close. So we'll see how things open up from there. But you can see where Thursday's action in that was pretty clean. I mean, we pivoted just between the algos that we had preset and supported off the bottom side of one. And then once we got to the top, we floated back and forth and sort of goofed around with it and just pushed back up towards that 41.41. So from our standpoint, the action's pretty clean, easy to follow. I think that it gets a little more complicated when we move into that macro session because the idea is really mixed amongst a lot of people as to the direction. And when I say a lot of people, I'm talking about the people that control the money. And you see that differential between the viewpoints. And so from their standpoint, you got to put the money somewhere. And the long side is really pretty much where they know it. And that's why we've seen mostly upside push to all of this. So keep that in mind. It can continue for a while, but as we see more and more evidence of softening, while they may think the Fed will ease, that's not necessarily the case, and that could create a great disturbance if that reality connects with the market. So, as always, trade well. Look for us on Skype chat. Have a good one.